Good morning, everybody. Today is the seventh day in the month of April 2022. My name is Heritage. I is a market analyst at Hot Forex. And quickly, as usual, we'll check through the markets, find out what the dominant sentiment is, if there are opportunities, and then how we can take advantage of it. But please remember that this is just a communication material. Nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the user is only responsible and liable. What we have this morning in terms of the overall market environment is a more mixed, weak start to the day. Yes, generally still a weak overall sentiment, but the moves are mostly still disjointed, so it still doesn't really build. Things are not really as clear as we would have loved it to be. What are the big stories? Well, IA also are set to release additional 60 million barrels of oil, right, following what the US also announced that they're going to do just to try and help ease the tight supply in the oil market. That has seen oil prices come down from yesterday as well, and so far today those losses are still being kept. So there's that. That has also weighed on commodity currency like the AUD, NZD, and the CAD, right? Apart from that, you also had, yesterday we had the hawkish FOMC minutes where details from the meeting, where most of the members, really wanted a 50 basis point, or many members really wanted a 50 basis point high, but eventually had to settle for a 25 basis point high because of the current tensions that we have in Ukraine, right? Apart from that as well, there's also general agreement that they want to shrink their balance sheet by 95 billion per month, right? Coming in the middle of the year as well. So all of that, also weighed on equities, and by extension, we also had commodity currency also suffered as well. But this should also be good for the dollar. But you notice that the dollar so far today is not really doing much, even weaker generally, right? Mostly mixed. So there's also that to pay attention to. In FX, generally, you have the euro and pound leading the majors, despite the fact that you have increase in sanctions against Russia, right? And then you still have euro and pound lead, and then you look at the reasons why it could be. The factors are still very negative. Yes, euro and pound really on the pairs, their crosses, they run into key support levels. So at least technical bounce, profit taking is a bigger reason for the upside than even the current environment that we have got so far. So there is that. On the other hand, you have AED and NZD that are lagging amongst the major FX. Equities are mostly mixed across board. Um, Now most of them are even retracing, pulling back, paring back all those losses from yesterday. So that also puts some form of uncertainty, a form of mixed environment generally in what we're seeing. Oil prices are down, yes, no doubt, right? But we pull back, and now we've seen oil prices also retest $90 per barrel level as resistance, right? After coming below 100 level, like we talked about yesterday. The VIX is elevated, but off the highs from yesterday, right? Even down a bit again into the session as well. So there's also that to also tell you that despite the fact that yes, it was a weak start, but the moves are not really moving as smoothly as we would have preferred it to be. The bond market, yes, the bond US 10-year bond is still up, right? A little bit on the day though, but nothing really tangible. Then which here I said, you see, the strength you have in the euro and the pound are mostly attributed to profit taking after such solid downside that we've had for the last couple of weeks as well as months, right? Um, Also, we had euro and pound crosses running to key support levels. So all of those things, also have seen it push back, bounce back. But don't forget that negative factors still persist. Apart from that, you look at the safe haven assets, they're mostly mixed. The dollar is mixed, for example, CHF, yeah, a little bit weak, but I'm a little bit strong. But generally, JPY is nowhere near, either the extreme end in strength or in weakness. So there's a little bit mixture there. Look at the AUD that is lagging amongst the major effects. We have supportive factors for the Australian dollar because of the RBA meeting that we had, earlier this week, where they were more, optimistic, hawkish generally in the comments. So there's also that. And equities also off their lows more in a more choppy environment. So these factors make the current environment a little bit tricky, and as such, convictions are a little bit low. Generally, in the day ahead, it's going to be a light calendar day, nothing much going on. Yes, we have Bullard on the wires, FOMC, Federal Reserve Bullard wires, but apart from that, unemployment claims, yes, but nothing really tangible so far on the wires. You look at equities, for example, you had, yes, initial downside now pulling up. You look at the US side, for example, downside up, right? Such choppy moves that we're seeing so far, and it's not really building, as much confidence as we would really like. That we had initial downside, now we're pulling back up. So generally, we've seen that overall, mixed. not so clear general market environment. I mean, this is really, really messy. Today's session as well, so same story. So that just says a little bit of patience would really, really be helpful. Earlier from this week, from Monday, we already had an idea. We already knew that the market environment for the week was going to always be messy, slow. And this is an example of what we've seen. It's not just about jumping into the market. If there is nothing of high conviction, it's really better and best to just, be more patient and stay on the sidelines until there is something a lot clearer. On the oil side, now, yes, oil prices are lower, right, on the back of, yes, strategic release as well in terms of more supply into the market. That's what we saw that jolt to the downside, yesterday. Although we had, and this also coincides with this overhead, trend line that we had marked out, 1, 2, and then we had 3, and now we're having on the 4 one. So that was really nice. Although I haven't missed that, you also look at where we broke below this overall level, this around this $98 per barrel level. It was the lows going back to the 4th of April as well as the 4th of April as well as the 5th of April, right? Apart from that, sorry, 1st of April as well as the 4th of April, thank you. 1st of April and 4th of April. From that, also going back to the 29th of March, if you even extend this a little bit more, you notice there was also the highs going back to February 24, right? And that also, you see that right now, we've also broken below that level right now. We tested it as resistance. Yeah, with more supply in the market, yes, we could see this move lower as well, right? Looking at target level, for example, we could just look and say that the next key level of support really comes in, back towards this lows around the 93 $93 per barrel, let's say 93, 94, that region thereabout. We could look at that, although convictions might not be so high, but I mean, it's what we have so far. Remember that tensions, sanctions, all of that is still a positive for oil prices. So there's also that to pay attention to. But so far, it's something that can be looked at as well. The dollar index is not really building so much confidence. Yes, the hawkish FOMC meeting had that jolt to the upside, but it was really, really a choppy one. Initial downside, later pushed higher as well. So not much there. And right now, so far, we're really, really trading flat, really not doing anything so far. So that really just tells us that a little bit of patience would really, really be helpful. You look at the VIX, for example. I mean, yes, elevated back towards 25 level when we're just really happy that we're back towards the 20. And just in yesterday's session and even just Tuesday session, we're back towards 25 again. But we're off the highs. And now we're still settling, I mean, very close to net unchanged levels for the day. So that clearly still shows us the kind of environment that we have, in terms of mixed flows that we're seeing so far today. Now, looking at the FX space generally, you want to look at and say, euro is strong. You want to say pounds is strong. You want to say AUD, NZD are weak. But in terms of looking at those currency and those currency pairs, you want to put it weak and strong. There's so many factors that do not even flow with what you have currently, right? And as such, I'll be a little bit more patient. I really want to, leave this out in terms of the current environment and pay attention to the bigger picture, right? The euro is still weak against the likes of the Australian dollar. I want to look at this as a pullback, right? Now you look at where we are currently, looking at the downside from, the highs of 31st of March, and then just trying to drag a Fibonacci level from there. We're back very close to the 50 level, right? Or let's even just prefer this 38 level. This is the better one to look out for, 38.2 level. It's yellow bit, so it's not really showing clearly. But I mean, we have that. Apart from that, it also coincides with the lows going back to, the 28th of March, this high going back to the 5th of April, as well as the high of the 6th of April. So what I would like to see, if we could really pull back below, this level, I think that would be interesting for me. I wouldn't really want to jump into that in today's session, no, because the current environment does not help, it does not support it. But the moment we have a tilt in sentiment, you have equities picking up, you have that more overall better environment. I really would love this to the downside from here, but I wouldn't want to jump into this right now. But it's something I'm really paying attention to, and I would really like to see it play out later. Currently, the short-term sentiment is not really building confidence, but what I see here, I like this. I like to pay attention to it because the long-term direction, the more, overall bigger picture supports this for the lower. But clearly, sentiment can still see this push higher. We could still bounce back towards, the 100 the 50 here, this moving average I have on my chart here. You could even pull back some more, but it's something I'm paying attention to as well. You look at the same thing with the pound, right? Now, similar story here as well. We're back trading very close to, you look at where we are right now. Right, let's just clean this up a bit, right? You notice that we have this overall overhead trendline resistance here, right? Apart from that as well, if you just look at where we're trading right now, I mean, this is also an interesting level, even though it's not the cleanest, but I mean, you also see a lot of reactions around this area, right? I could look at this and say, in line with the overall environment, overall trend that we've seen so far, um, this overall downtrend we've seen so far, right? I mean, now in this case, I can just clean it up a bit. All right. Now, yes, you look at this overall trend that we have from the upside. Yeah, we've broken this to the upside. So that makes it a little bit tricky. We could get more profit taking, more pullbacks on this particular one. But in the short term too, right? You look at where you are right now. If we should clear out this one, then that cancels the entire thing out. But it just tells you that, the upside you're seeing now mostly is pullback. You look at where we are trading from, the kind of let's just clean up the kind of downside that we've had over the last couple of sessions. I mean, has been massive. And where we're trading right now, you can see is lows going back to 14th, let's see, 2018 around, November thereabouts. So I mean, having to see pullbacks from here is not really a surprise. So there's also that to pay attention to. I also want to watch out for. So yes, yeah, we talk about strength in pounds, strength in the euro, weakness in AED and NZD. But in terms of convictions, I'm not looking to chase those kinds of moves. I would really want to even be on the downside of this, but the sentiment would not allow me to do that, so far. Having said that, on the calendar today, it's really a light one. I mean, that also just helps, cool the total environment that we have. Yes, retail sales for Eurozone, yes, out there, but I don't expect so much in terms of, volatility from this. But having said that, you don't have so much going on. Yes, initial jobless claims, unemployment claims on the wires. You also have a few central bank speak as well. Fed Bullard is on the wires. You also have BOE Peel on the wires as well. But apart from that, there's really, really not so much, going on the calendar in their head. So overall focus will still be on the sanctions, tensions in Europe, and would be on the bond market, be on Federal Reserve, speakers' speeches. That would also be interesting. Their stance, pricing in tighter monetary policy, that would be interesting. But generally, with the kind of environment that we have so far, I think patience would be a virtue. So that's it now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.